I used the money in my policy to go out and buy the plane. My first plane was a 172 Cessna, second one was a 206, third one was a Piper Meridian, and now this one is a Pilatus PC-12. Went out and bought that one in 2022, right at $3.1 million for that plane. We still have that plane, and that's the plane we're currently flying, using the banking systems. You don't have to change anything. You don't have to change your cash flow. You don't have to work any harder. You don't have to take any additional risk or lose control of your money. You're simply adding one additional step in your financial life. And when you do that, your financial life will drastically change for the better. I learned about this concept, and it took me 2 years to start because I thought it was too good to be true. Thought there had to be a catch. And I get it. I get it because it's a paradigm shift. It's not what conventional money and finances are teaching. But just in our organization, we have over 17,000 clients in every state of the country. So don't take my word for it. Don't take Dr. Kyle's word for it, my daughter, Hannah, anybody else on our team. Go out and listen to what our clients say and how this is working in their financial life.
Brent Kesler is the founder of the Money Multiplier. Money Multiplier is a premier financial education company specializing in the infinite banking concept. After personally paying off nearly $1 million in third-party debt using the exact methods he now teaches, Brent made it his mission to share this life-changing strategy with others. He is the author of Mapping Out the Millionaire Mystery with Chris Noggle. It's a practical guide to reclaiming control of your finances using specially designed whole life insurance policies.
So look, here's the deal, okay? All you're gonna do is make the decision.
This is my time. I'm on the rise.
Hi, I'm Kyle Stevenson, and you're listening to the Assets and Orthopedics podcast. This show is for high-income professionals who want to think like the wealthy. We focus on elevating mindsets, building empires, and creating a lasting legacy. Our goal is to empower you with financial intelligence, long-term strategies, and the mindset shifts necessary to achieve true financial freedom. We dive into real estate investing, entrepreneurship, and wealth-building systems that help you break free from the grind and live with purpose. At LegacyRx, we live by a simple creed. Be bold, embrace the hunt, unleash the beast. It's time to take action, design a life of purpose, and fearlessly pursue the freedom you deserve. Enjoy the podcast. All right, welcome back to the Assets and Orthopedics podcast. This is your host, Kyle Stevenson. If you've been with us for a while, you'll remember our powerful first conversation we had with our guest, Brent Kesler. He's a former chiropractor turned national speaker and infinite banking expert. Welcome to the show, sir.
Hey, Dr. Kyle, thanks for having me back, man. Excited to share some more.
Absolutely. We love it. All right. So today we're going to go a little deeper. This episode is for those who already understand the basics of what the Money Multiplier does, the infinite banking concept. And if you want to move from theory to execution, this is the podcast episode for you. So let me just go through a quick bio and then we'll get into it. Brent Kesler is the founder of the Money Multiplier. Money Multiplier is a premier financial education company specializing in the infinite banking concept. After personally paying off nearly $1 million in third-party debt using the exact methods he now teaches, Brent made it his mission to share this life-changing strategy with others, especially high-income professionals like physicians, business owners, and real estate investors. He is the author of Mapping Out the Millionaire Mystery with Chris Noggle. It's a practical guide to reclaiming control of your finances using specially designed whole life insurance policies. He's a former chiropractor turned national speaker and wealth strategist. Brent has helped thousands of families and professionals implement the infinite banking concept to build long-term wealth, reduce taxes, and create generational financial freedom. That was a lot. That was a great bio, I think, because you've really made a big splash in this space. You're the pioneer from your mentor, R. Nelson Nash, right? So if we can, let's just get started simply with what is infinite banking quickly, and just explain it for anybody that maybe didn't listen the first time. And you're going to have to go back and listen to our first episode. But
yeah, absolutely right. And again, just to start out, this book right here, Becoming Your Own Banker by R. Nelson Nash. This is a book that you all want to add to your wealth building library. So again, go out, find this book wherever you buy your books at. If you have trouble finding it, you can, contact us or Dr. Kyle here at the Money Multiplier. You can send me just an email, brent@themoneymultiplier.com. But actually, R. Nelson Nash was my mentor, and he totally changed my financial life. He passed away back in March of 2019 at age 87. And this is a book you want to definitely add to your wealth building library. And then anyway, just since you mentioned it, Dr. Kyle, right? So like myself and Chris Noggle wrote a book called Mapping Out the Millionaire Mystery. This book, I will send you the ebook version. All of you, I will email that to you for free, Mapping Out the Millionaire Mystery. Just either go to our website, themoneymultiplier.com. You can find out how to get the book, the e-version of the book there, or send me an email, brent@themoneymultiplier.com, and I'll send that to you. And just a quick shout out to my daughter, Hannah Kesler, that does the Money Multiplier podcast. So Hannah has also wrote a couple books, one called The Single Millionaire Chick, and the other, there's a new book called The Companion, really an infinite banking book for children. So those are some resources for you. But yeah, so the thing that we owe is all gratitude to R. Nelson Nash for delivering this powerful concept into our own life. But to answer your question, Dr. Kyle, what is the infinite banking concept? A lot of different people can answer that a lot of different ways. It is a wealth building vehicle. It is a process in order to build, keep, and create wealth through your own debts and expenses that you already have. It allows you to recycle and recapture all of that money that has been leaving your family forever. Let me just give you an example. This is a $20 bill, right? Like if you go out and you spend this, let's make believe this is a $20,000 bill and we want to go buy a car, a $20,000 car. Well, how do we buy a car? We only buy a car one of three ways. Every one of you have bought a car one of three ways. You either pay cash for the car, you bank finance the car, or you lease the car, right? Because I know you guys are all honest and you didn't steal the car. So the thing we have to do is we have to give the money to the car dealer. The car dealer gives us the car. They get the money. We get the car. Transaction is over. Everybody is happy. But what happened to that $20,000? Well, that money is gone forever. It has left your family forever. It is gone. It is gone. So when you run your money, when you run your finances through this thing called the infinite banking concept, you are now able to keep that money inside of your family and recycle and recapture all of that money that you just spent for the car. So what does that mean? That means you actually can buy the car, so you have the car, but now there's also a process, a system, a concept to get all of that money back. And that money stays in your family. Now, I know that sounds like, what? That's a lot. Sounds too good to be true. Well, if you go to our website, themoneymultiplier.com, and you click on a little tab that says Watch Brent Now, I have a 90-plus minute video that you can watch with all the downloadable attachments and all the handouts you can print out. And it explains this concept into great detail. And yeah, you're going to have some questions after that, but it's really going to get you to see, okay, now I can kind of see how that works. Now let's get some questions answered. Now, I know that all sounds great, and it probably sounds too good to be true. Well, back in 2006, if you remember from the first time we did a podcast together, I heard about this concept in 2006, but I thought it was too good to be true. Somebody was speaking. I was at a chiropractic conference, and somebody was speaking about this infinite banking concept. And I said, wow, that sounds like really good information, but it sounds too good to be true. I left the conference. I actually even bought the book. I bought the book, Becoming Your Own Banker, but guess what I did? I came back home, put the book on my shelf, went back to my normal chiropractic life, and did nothing with the information. Until 2 years later, I go back to another conference. 10 or 12 of my colleagues that were at the previous conference are there. The only difference between them and me is they heard it the first time and they implemented and acted upon it. So they were going on and on about how powerful this concept was working in their life, how they were paying off debt, recycling, recapturing money. Because as physicians, as a chiropractors, right, I had a lot of student loan debt. You guys as physicians, orthopedic surgeons, dentists, orthodontists, right, you probably have lots of student loan debt. And even if you're not and don't have student loan debt, you may owe for your houses, your clinics, other stuff, college, for your kids getting married, whatever it is, right? You might have debt that you pay. Well, where does all that money goes? It goes out, it leaves your family forever. With this concept, the cool thing about it is that you don't have to change anything. You don't have to change your cash flow. You don't have to work any harder. You don't have to take any additional risk or lose control of your money. You're simply adding one additional step in your financial life. And when you do that, your financial life will drastically change for the better. Now, you're thinking, well, why haven't I heard about this? Why doesn't my CPA tell me about this, or my financial coaches or advisors? Well, a couple reasons. The main reason they're not telling you about it is because they don't know themselves. They just don't know this themselves. They have not been taught. And the people that may know something about it or think they know something about it, they really don't, because they get caught up in all the noise that's out there. Because if you think about it, if you go to a financial advisor or even your CPA, or, they tell you, what do they tell you? They say, get a good job, work hard, max out your 401k, your IRA, your retirement plan, and put that money away and be able to live on that later. Well, are there any guarantees with that? No, and there's no guarantee. Well, it is guaranteed to go. It is guaranteed to never go below zero. But how exciting would that be if that actually happened? Wouldn't that suck? Who's controlling that money? You or somebody else? Somebody else, right? And if you really ask yourself, especially if you guys are physicians, if you really are honest with yourself and say, well, my retirement account, my 401k, my SEP plan, whatever it is, what do I really know about that? You guys really don't know nothing.
Nothing.
Yeah.
Nope.
Yes, you may know if it goes up or down, right? Based on the quarterly statements you get. You may know if those monies are invested in a low, moderate, or high risk category. But other than that, you guys really don't know crap about that plan, right? So you've got to start learning, and you got to start getting in to what is actually going on with your money, and how do you keep that money in your family. Now, the last thing I'll say about this is the concept is not new. It's not on trial. It's not being tested. I did not invent this. R. Nelson Nash did not invent it. It's been around for over 200 years. If you go out and research the wealthy, the Rockefellers, the Rothschilds, the Morgans, the Stanleys, the Barclays, go out and see how Walt Disney built Disneyland, how Ray Kroc funded McDonald's, how Pampered Chef got started before Warren Buffett bought Pampered Chef. This is the tool, this is the vehicle that they used in order to build, keep, and create wealth. Because look, the majority of you guys watching this, because I think the majority of you are physicians, you're probably doing a pretty damn good job at making money. You all know how to make money. But here's the thing that I find in common with most of the audience, and yes, physicians also, right? You as physicians do good at making money, but you suck at keeping your money. You just suck at keeping it. It's not your fault. You've just went down the path that your parents, your grandparents, your friends, your colleagues, and your coworkers are telling you to go down. All I'm saying is stop taking advice from your broke-ass brother-in-law and just start doing your own research on how money actually works. Now, this is a paradigm shift. It is not normal way of thinking about money. It's not what we normally think about how to deal and how to use money. But keep an open mind whenever you're learning about this. And don't take my word for it. Go out and do research. Go out. Again, the thing is, all right, like the thing I tell everybody is go out and you can enter into Google. You can Google my name, Brent Kesler with one S. You can Google the money multiplier. Go look at all the case studies, the plan designs, the success stories, the testimonials of all of clients, of hundreds of clients. I mean, again, we at the Money Multiplier, and again, I'm not the only one that does this, by the way, but just in our organization, we have over 17,000 clients in every state of the country, adding on about 180 new clients every single month, approximately, sometimes a little more, sometimes a little less, but around $180 a month on average over the last 6 months, right? So don't take my word for it. Don't take Dr. Kyle's word for it. My daughter, Hannah, anybody else on our team, go out and listen to what our clients say and how this is working in their financial life.
That is fantastic. Great way to open it up. Let me just give you a little update on everything since the first time we had you on. I think I had you on in October or November of 2024. And after that episode, I was sending it out to friends, colleagues, and I was getting a lot of texts back saying, it's a scam, be careful, don't do it, this, that, and the other. Well, I am one to do my own research, to your point. And so since that time, I've had Devin Burr, Hannah Kesler, Garrett Gunderson, who talks about this with the Rockefeller method. Chris Noggle and Jason Simple are coming on next week. But since that time, I bought a policy for myself, my wife, my kids, and we're using it because you don't want to just let it sit, right? You want to get money moving. And it has been awesome. I am here to tell you it's not a scam. It's fantastic. And a lot of those people that told me it was a scam early on, I said, do your own research, and they've sent policies. So that's the big update. But I want to just mention one thing, because a lot of physicians have listened to White Coat Investor. Are you familiar with the White Coat Investor? His name's
I think I've heard about it, but I don't really know.
Okay. His name's Jim Dolly. He's great. He's an ER doc. He wrote a book called White Coat Investor. He since has a blog and a podcast, and pretty much all physicians, anybody that reaches out to me, they're like, man, I heard you on the White Coat Investor podcast, and I love what you're talking about. It's very different than what Jim Dolly and White Coat Investor represents. I think he's more of the Dave Ramsey type, if you will. And so he's big on buy term, invest the rest. And so what would you say to people that are like, well, I've always been told buy term life insurance, invest the rest, and I should be more well off in the future?
Yeah, no, great point. Thanks for bringing that up. And the first thing I'll say about that is Chris Noggle several years ago, we basically did a rebuttal, or I don't know, call it a rebuttal or whatever, but a reaction to just as far as an episode that Dave Ramsey had about the infinite banking concept. So what we did is Chris and I remember we're sitting in Buffalo, New York, and we played what Dave Ramsey said, and we would stop it. And Chris and I recorded, a podcast video, whatever it is, where we talked about everything Dave Ramsey talks about, which that's Dave Ramsey, buy term and invest, the difference. So we went and again, that would be a great episode for your listeners to go out and listen to and just kind of see what we said on that. But to answer the question for today is, again, that's what a lot of people say, buy term insurance and invest the rest. Well, a couple things with that. Remember, term insurance is a death benefit coverage that if something happens to you unexpectedly and you pass, your family will get a death benefit. Now, let's just talk about the stats on term insurance. Less than 2% of term insurance policies actually ever pay out. That means that 98 out of 100 never pay out. The only way you ever win in a term policy is if you die within that term. Now, it is a way to beat the insurance company. It's just not a very exciting way to do it. But if the insurance company really thought you were going to die during that term, they would never sell you the policy. Mm-hmm. And if you've ever noticed, if you've ever started a term policy and then go to renew the term, how much more is the cost of that policy? And you eventually get to an age and you're like, well, there's no way I can't spend all this money to buy a term insurance policy. It's just way too much expense. It's just way too expensive, right? So why not buy a whole life policy, a policy that has cash value? A term policy has zero cash value. So all you're doing is you're buying insurance that you don't have any cash value associated with, and that you have to die during in that term. But if you have a whole life policy, that policy is for your whole life. And a lot of people don't see, or at least in the beginning, maybe after they learn a little more about this, well, they do, obviously, but they're like, okay, well, a whole life policy, I don't want to spend money on my policy for a whole life. I don't want a whole life. Well, a whole life policy is guaranteed. It has guaranteed growth inside of the policy. It's guaranteed to grow each and every year. That's not me telling you. That is in the policy contract. There is no mutual company that we deal with that has no growth. I mean, that has no growth year after year. You have a guaranteed growth inside of the policy. Plus, on top of that, you have dividends. Now, dividends are never guaranteed, but every company we use has been paying dividends for 123 plus consecutive years or longer. So is there a pretty good chance the policy is still going to pay a dividend? Yes. But even if they don't, you have a guaranteed growth inside of the policy, and you have cash value that you can use now. Not like years down the road, now, immediately. And when I say immediately, within 30 days, after you put money in the policy, you have the cash value to be able to access, to use for whatever you want in your own life. And when you're using that cash value, the cool thing is all the money in your policy is still compounding and growing. Even though you're using the money, it's still compounding and growing, right? So a term policy has no cash value. A term policy, you're saying, I want X amount of death benefit to the insurance company, and based on your age and your health, that death benefit is going to cost you a certain dollar amount. In our type of policy that we do, I don't ask you, Dr. Kyle, how much death benefit you want. I say, how much cash value do you want? And then that's how we design your policy. Now, and based on your age and your health and how much cash you want to put into that policy, that will buy you X amount of death benefit. You'll see how much death benefit that buys you. If you need more death benefit, then what we could do is we could just add more to the whole life policy, or we could add what we call a term rider onto the policy. We call it a convertible term rider, where that term rider can now be transferred later down the road within a certain amount of time. Don't hold me to how long, but I think you even have 10 years. Don't hold me to that number because it may be different for companies and age. I don't remember that off the top of my head. But a certain amount of time, you can convert that to a whole life policy. Now, the thing I think that's most important in a whole life policy is, yes, we do it for cash value. We want cash, and we kind of minimize the value of the death benefit. But the one thing that's guaranteed to happen to every one of us on this podcast today, everybody in the sound of my voice, we are guaranteed to die, to pass, graduate, die. You pick the word that you want to use. I like to use the word graduate. It's not an if, it is a when, okay? So we are guaranteed to pass. So life insurance is the only thing that you will ever pay for. By whole life insurance, not term, whole life insurance is the only insurance that you will ever pay for that you're guaranteed to use. It's the only one, because you're guaranteed to pass, die, or graduate. So if you even like your kids, you don't have to love your kids, or you don't have to love family members or have anybody out there, but I'm just going to assume you have somebody in your life that you care about, whether it's a child, a spouse, whatever, a niece, a nephew, a charitable organization. Because there are people that have no family, have zero family at all. We do run into those, but they have something of value to them, something that they like. Like, I want to leave my money to the Boys and Girls Club, this charity, this foundation. They love dogs and cats. They want to leave it to Dogs and Cats of America. Whatever it is, the thing that you do is now you're creating a lifetime legacy for that person or organization, child, grandchild, great-grandchild, niece, nephew, charitable organization, whatever it is, because at the time that you do pass, die, graduate, that death benefit is going to go to whoever you decide it's going to whoever the beneficiary is that you pick. But so I think that sometimes we underestimate the value of that. But then on top of that, you are actually using your resources and your money while you're living. I say this all the time when I'm out talking and doing seminars and stuff like that. And by the way, let's not forget,
Mhm.
Kyle's got a seminar coming up on the 23rd, 24th of
October 24th and 25th. Yes,
24th,
sir.
25th in Indianapolis at the JW Marriott. And if you have not been to the JW Marriott, that place is amazing.
Mhm.
The only thing you're not going to like about it, I'm a Kansas City Chiefs fan,
Yep.
is probably during October I'm going to get there. And on the outside of the JW Marriott, it's going to have all Indianapolis Colt stuff on
Mhm.
there. So I'm not crazy about that as a Chiefs fan. I'm telling you, dude, that JW Marriott is the best.
Yep.
And I don't know if there's a home football game there.
There is
but-
that Sunday, actually.
Oh, there is.
Yep.
I would highly recommend you spend the extra time there to go to Lucas Oil Stadium to watch the football game, because it's a pretty cool experience as well. And Indianapolis is just a great place to go to. And if you haven't been to St. Elmo's, there's one other place down there, and you love like cocktail shrimp with this out-of-the-world horseradish sauce. I mean, I'm a professional eater, so I'm very good at eating and foodie stuff. You got to go like to St. Elmo's. There's one other place. I just can't remember the place of it too. And again, I quit.
Harry and Izzy's is also owned by St. Elmo's. Peyton Manning.
Harry and Izzy's.
Yep.
Harry and Izzy's.
And Peyton Manning's part owner of that as well.
But you got to make a reservation ahead of time. I would highly recommend that. And also, if you like, I'm not an alcohol drinker. I totally quit drinking alcohol 19 months ago. But if you like drinking alcohol, they have this thing called the St. Elmo Cola. The St. Elmo Cola, which is pretty good too, with their cherries and stuff. I know we're getting off topic.
That's all right. Hey, let me piggyback on that real quick. Oh, go ahead. Finish your point.
My point is get to the seminar that Kyle is having in October in Indianapolis. I get the opportunity to speak for 90 minutes on this concept, and I am like the zit on the elephant's behind as far as this seminar goes. So think of the elephant, and my session will be like the zit, the pimple on the elephant's butt. Kyle has so many awesome speakers lined up for this event. You want to get there and you want to learn these wealth building strategies, just like, and it doesn't matter if you're in real estate or not. I know that this is probably geared a lot towards real estate, but even if you're not, you're going to pick up nuggets of how you can apply it to other parts of your life. And guys, just get there to Indianapolis.
Yep.
You will not be sorry that you come to this event. So if you've got something planned, reschedule whatever that is. If your kids are getting married, tell them you'll join them after they get married, before, whatever it is, you got to get to this event. I mean, just make it happen. Make it happen and get there.
October 24th, 25th, LegacyRx Conference. Brent Kesler will be a premier speaker, 90 minutes right before lunch. It's going to be powerful. You're going to learn a ton. And there is some real estate, of course, but it's wealth building. It's bigger than just real estate, right? It's how do we stop thinking like the middle class and think more like the wealthy?
Yeah. Well, Kyle, I actually use this concept to do my real estate purchases or to do my lending. I like to do lending, all right, a lot more than I like buying new
Let's talk about it.
Properties now. But I'm in the process right now of doing some new Airbnbs and stuff. And again, I have some I have some long-term rentals. I have some short-term rentals. And the thing I do is I need money to do that. Well, how do I use and access the money? Yeah, I can go to a conventional bank and borrow money. You tend to, and I'm not saying don't do that. I'm not saying don't go to a conventional bank and borrow money. I'm not saying that's a bad thing to do. I just would rather be in control of my banking system where I'm making all the money instead of the profit, instead of the stockholders and the shareholders of the conventional bank, because I'm now creating my own banking system, and it's internally staying in my family where that money is not leaking out to other people. Okay. And I'm not saying this is an either or right? Right. This is an and. This is an addition to what you already do. And the thing you'll do is the more that you practice this concept in your life, you will eventually get the bankers out of your life forever. forever. You'll get them out of your life. So you're not a slave to that system. You're not a slave, because guess what happens? The thing is with banks, right? Let's just say if we have something in our life that happens. Oh, maybe COVID, right? Who expected that?
Mm-hmm.
Maybe there's a hurricane. I live in Florida. That happens,
Yep.
you know, who knows? Maybe we have clients in Hawaii, fires in Hawaii. What about California? Fires in California. I mean, right. There's a lot of devastation and destruction in Texas recently. Look at all that crap that happened with the floods and stuff. You never know what can happen, whether it's to you personally or a life-changing catastrophic event. And if you need money, or if you've got money even borrowed out and this stuff happens, well, that throws a monkey wrench into your life, doesn't it?
Yep.
Well, now what happens when you have this money borrowed out from a conventional bank and things have just drastically changed in your financial life? Maybe you can't work for a while, right? So like possibly somebody gets sick. Kyle and I were just talking off air that somebody we both know that's super, super healthy, a skier, a mountain biker that lives in Colorado. We always say, hey, man, that guy looks better in tight jeans than any male we've ever seen. He's just a super fit person. Well, just recently he gets diagnosed with stage 4 lung cancer and has no freaking clue and never smoked a day in his life. And you would look at him and thought he was the most healthiest individual. I have a brother that is 7 years younger than me that is like a picture of health. He actually had went in to the doctor. He was going to donate a kidney to my oldest son. He went into the Pennsylvania hospital. This was about 10 to 12 years ago. He was going to donate. This is a brother that's 7 years younger than me. He was going to donate a kidney to my oldest son. So in order to do that, you have to go in and you got to run through all these tests. Well, he ran through the tests and he came back with non-Hodgkin's lymphoma. Who in the hell would have ever thought? He may not have ever even discovered he had non-Hodgkin's lymphoma. So again, all right, so thank God he's in remission. He's doing okay now. He still goes through stuff, but the point is anything can happen in your life, and the things like unexpected or even expected things. And now you have this money for your house, your car, your business, whatever, that you've got borrowed out from the conventional bank. Well, let me ask you this. Does the conventional bank give a crap that you have these problems? Do they care that there's COVID? Do they care that you're sick, it's too cold or too hot? Do they care if there's protests and riots? Do they care if there's a Republican or Democrat in the office? They could care less when you have financial problems. They want their money when they want it. And if you don't give it to them, they are going to start going through the process to foreclose on you. So can you see how that can cause a burden? Well, when you have your own banking system and you're utilizing your own banking system, who makes the decision whether you can pay back or a loan or not? When you're in control of all the aspects of your financial life, that decision is made by you. So if you don't make your payments back for money that you borrowed, are you going to foreclose against you, Kyle? Are you going to foreclose against Kyle?
No, sir.
No, you're not going to foreclose. You're just going to postpone those payments until things get better. So can you see how this gives you a peace of mind?
Yep.
A lot of you guys are physicians, so you can probably relate to this. I was a chiropractor. I'm still a chiropractor, but I heard about this concept. I paid off almost $1 million of debt. I won't get into that. You go watch my first podcast episode, and I talk more about that. And I paid that debt off in 39 months. And I just wanted to share this with as many people as possible because nobody ever taught me this. I was mad. I was pissed off at my parents and my grandparents for never sharing this with me when I learned about it. Now again, I was mad at them because they didn't tell me. But guess what? The reason they didn't tell me is not because they were purposely holding it from me. They didn't know. Nobody ever told them. Your parents, your grandparents didn't tell you about this because they don't know about it, right? So it's my purpose and my mission to share this with as many people as possible. And that's what I do. And as a physician, here's what I think about. I think about how do we help people with their health? Well, the number one cause of death, or at least it was a year or two ago, I don't know, I guess maybe you guys can answer this question. The number one cause of death in the United States is heart disease, right? Well, the number one cause of heart disease is what? Stress. Well, what's the number one cause of stress? Financial money issues. So can you just see how helping people with their money and finances helps them with their health? So that's the way I look at it, whether you guys agree or not. Not only are we helping you with your money, but we're also helping you with your health. And honestly, I think we're saving marriages as well. Because, anyway, most people that get divorced, isn't it really over money?
Oh, yeah.
Yeah, it could be other things, but isn't money probably the major topic? I'm not a relationship expert. This isn't Dr. Phil, but I probably think most marriages, end in divorce or dissolve because of financial issues.
Yep. That's so good. So many great points, and a couple things I want to mention with that. I heard it on Hannah's podcast, actually, one of these days, and I put it in my phone and as a quote, there's no price tag to a peace of mind, right? To having peace of mind. And this is what you're talking about here is guaranteed growth, compound interest, uninterrupted, tax savings, all these things, but it's guaranteed. That's the beautiful part. So even when physicians call me, they're like, hey, I want to invest in this real estate deal. I'm saying, well, I'd first put your money in becoming your own bank policy, infinite banking policy first, and then use that money to invest in the real estate, right?
Absolutely. All we're doing is adding one step. So again, everybody does not have to go out there. Actually, nobody does not have to go out there and change anything that you're doing. All we're doing is adding one step into your financial life. Because see, here's what you guys do right now. Every time that all you make money, it could be active income, passive income, investment income. It could be a check in the mail from grandma on your birthday. Guess what you do with it? You take that money, you put it into a conventional bank, into somebody else's bank, Wells Fargo, US Bank, Chase, BMO, whatever bank that you bank at. You put that money into somebody else's bank. The bankers make a good living off of the money that you put there, because guess what they do with your money? The bankers take that money and they go use it. Now, banks are the number one purchasers of whole life insurance in the world. Wow, isn't that a little bit strange? Not term insurance, not universal, not IUL, not variable, no, whole life policies. Don't take my word for it. Go Google something called BOLI. BOLI, it stands for bank-owned life insurance. Conventional banks have quadrupled the amount of money that they put in whole life insurance since 2013, 2014, right? Why are banks doing that? Is because they're stupid or they know something the rest of us don't know. That's right. They know something the rest of us don't know. So that's what we're going to do. So look, here's the deal. Okay, all you're going to do is make the decision, instead of putting your money in the conventional bank first, you're going to put it into the whole life policy, which is really the insurance companies. Now, all of these insurance companies are mutual companies. They've been around for well over 100, 150, 200 plus years. Again, this is what the wealthy do, right? So it's not on trial, not being tested. And some people say to me, actually, I just had this conversation with my 16-year-old granddaughter. She says, hey, my dad, which is my oldest son, right, the one that has had the kidney transplant, she says, hey, my dad said he wants me to start putting, and she's 16. She says he wants me to start putting $600 a month into my life insurance policy. And I said, well, Dad, I said I have that money during the summer. I work. But I'm going to be, but when school comes again, because she's about to be a junior, when school comes again, I'm not going to have that money to put in. And her dad said to her, Tori, don't worry about it. Just put it in. And if you don't have it, we'll figure it out. So anyway, she's coming to me. It's just me and her in the room. And again, this is just like last week, 10 days ago. I'm down there in Florida because we went out fishing and stuff. And so she comes over to visit me, and she says to me, Grandpa, she says, I'm a little worried about doing this. And I said, well, talk to your dad. And she told me this. And I said, Tori, your dad gave you the answer. He says, if you can't put the money in, he said, he'll take care of it. He said he'll take care of it. So what he's really telling you is that you're going to do it, But if you run short, he's going to do it for you because he has his own policies and he knows how important it is. And then she made a comment or a statement, and I knew she didn't totally get it. And again, she kind of does, but again, at 16, you kind of forget stuff.
Yeah.
You're not listening to everything. And she said, yeah, but I kind of like putting that money in my bank because it's savings and I can go get it. And I said, Tori, I said, remember this. I said, I tell people this all the time. Maybe I need to start talking about it more. I said, look, there's two buildings. There's a conventional bank, like a Wells Fargo, a Chase Bank, where we go and put our money into our savings account. And then there's also an insurance company building. And the only difference between those buildings is the name on the door. One says conventional bank. The other says insurance company. They're both depositories, meaning they're both places for you to store money. If you have a choice of where do you want to store money, do you want to store it in somebody else's bank, Wells Fargo, Chase, US Bank, BMO? Or do you want to store it in your own bank, the mutual insurance company, all the insurance companies, there's lots of them. Whose bank do you want to store it in? Where do you want to store your wealth? Where do you want your bank to be? Well, obviously, Grandpa, I want it in where I'm in control of it, and I can access the money and the cash value and all of that. So I was happy to have that teaching moment. I got to admit, I was frustrated at first because she understands this concept, but I also have to remember that sometimes we forget some of the stuff that we've learned, and we have to be reminded of that. So it's so important and again, all right, I know I got off on a tangent, but the thing I do, Dr. Kyle, as you know, I put the money in the policy. Then what do? I go to the insurance company. I call them up. I say, Mr. Insurance Company, I need to take a policy loan. Now, I'm taking a policy loan. I'm not withdrawing my policy. I'm not cashing it out. Okay. I talk more about that in the first segment. I talk about that more on if you go to the website, themoneymultiplier.com, watch Brent now, you'll see that. I'm taking a loan. I'm taking a policy loan. You're like, loan? That's bad. Why? I don't want a loan. I don't want to borrow money. Well, yes, you do. If you really understood the concept, you want to, because what you're doing is you are borrowing from the general fund of the insurance company. Why is that great? Because you're not borrowing your own money. Well, okay, I'm not borrowing my own money. No. You're borrowing from the general fund of the insurance company. Well, actually, what does that mean? That means that all your money is in the policy growing tax-free. Did you hear what Dr. Kyle said earlier? He says you're putting this money into a process, a system, a concept, which is the policy that's properly designed for high cash value, high immediate cash value. What does immediate mean? Within 30 days. You're putting it in to this concept system policy that has a guaranteed tax-free growth. Tax-free is very important. And Kyle also said the word uninterrupted compound interest. Do you know what uninterrupted compound interest is? That means there's no interruption in the compounding of your money. If you took a penny and you doubled it every day for a month, I want you to look and see how much you would have. It'd be like $1 million, or do it for 30 or 31 days. Mm-hmm. But if you stop that, if you go in on day 17, 9, 12, 27, what happens if you interrupt that compounding effect? It's a huge effect on your money. Mm-hmm. You don't have near as much money. So what you do is you have this money, it's growing in a tax-free growth environment. What does that mean? That's important. Here's what you want to do, ladies and gentlemen, boys and girls. You want to pay tax on your money one time only. You want to get that money into a tax-free environment where it's growing internally and the government is completely out of your hair. Now, if you like big government control, you're probably not going to like me very much. We're going to disagree. Okay? But now I'm all about paying my fair share and stuff, and you want to pay your taxes, but I don't want to pay the damn taxes over and over. I want to pay them one time on my money. I want to get the money into a tax-free environment where that money is growing tax-free. When I want to access any cash value of that money, I'm never asked a question, well, why do you want it? How long are you going to keep it for? What are you going to do with it? I don't want to go through the proctology exam of explaining why I want to take a loan. I don't have to answer to a committee. I answer to a committee of one, and that's me. And if I have the cash value in there, I can borrow the cash value out, right? So I'm taking a loan from the general fund of the insurance company. So my money is still growing uninterrupted, tax-free, and all the money is still in my account, even though I'm using the money too. Now, a couple of you naysayers are like, well, I don't want to pay back the policy loans. You don't have to pay the policy loans back. You don't have to. You're not obligated to pay the policy loans. Your policy is still going to grow because you're still paying the policy premium on the policy. But if you understand the concept, which you will when you're around the campfire more, drinking more of the Kool-Aid, you're going to see that you want to pay back your policy loans, because guess what? When you pay back your policy loans, it just gets bigger. The banking system just gets bigger. And remember, it's all in your control anyway. And in this book, Becoming Your Own Banker by R. Nelson Nash, page 54, 59, 60, 61, and 62 shows you exactly that. It shows you exactly why and how you want to pay back your policy loans. But if you run into a problem and you can't do it, that's okay too. So here's what I would tell you. If you're going to go out and borrow money from a bank or borrow money from anybody that you've obligated to pay back, are you going to borrow it and not pay them back? No, you're not going to do that. That's not what you would do. You have an agreement to pay the bank back for your house mortgage, car payment, credit card bill, whatever it is. And you pay them back and you don't miss a beat, because if you miss a beat, you're going to have fines and penalties and extra interest. They may foreclose. Your credit's going to go to crap, right? So you're going to pay them back. So if you borrow from yourself, why would you not pay yourself back? In other words, why would you not treat your money the same way you treat a bank's money? In your mind, if you think, well, I'm not going to pay myself back because it's my own money, but I'm definitely going to pay a bank back because I owe them money and it's a bank. Why would you treat your money any different than the bank's money? If you think that, then you're saying the bank's money is more valuable than your money. And it's not. I know this is a paradigm shift. This is not what your accountant, your tax advisor is talking to you about, because guess what their job is? Their job is not to plan your financial future. Their job is to save you as much on taxes today. They don't care about next year or the year after. I mean, yes, okay, they do maybe, but most of them, they need to give you instant gratification right now today. This is all not about instant gratification right now today, right? Yes, it's got a lot of instant gratification, but we need to think long range. Nelson Nash, if you've ever listened to my daughter on her podcast, the Money Multiplier podcast, she always talks about thinking long range. I tell my kids all the time, I've told them this for years. I said, the decisions that you make today with whatever it is, the decisions you make today are not necessarily going to affect you today. They're going to affect 1, 5, 10 years into the future. So the things that you do today is not going to necessarily affect what you today, good or bad, right? Good or bad. They're going to be, the consequences or the rewards come in the future. But I say future, and in our world of the infinite banking, within 30 days, you have cash value access to your money. And it gets better over time, Dr. Kyle, you know.
Oh, yeah.
Better than yesterday. Tomorrow is better than today. Not me telling you that is in your policy contract. And before you ever, whether you do it with us, and hopefully if you do this, you're going to do it with us at the Money Multiplier, because that's where you heard about it. No matter who you do this concept with, you need to see that contract ahead of time and make sure it has guaranteed growth inside of the contract, and you see the growth inside of the policy.
That's awesome. Let me make a couple of points real quick. So since the last time we talked on the podcast, my lender, who I do all my banking with, he's a family friend, but we have our mortgage and our, surgery centers and any, investment properties, whatever. I've used him. So he's been my banker. Once we learned about this concept through you, he wants to buy a car, and he's like, all right, man, I think I'm ready to get my own policy, which is awesome. He's a banker. He understands it. He wants to get his own infinite banking policy now. The other point we talk about with this, uninterrupted compound interest. And everybody learns about compound interest. We've always heard it's the eighth wonder of the world. We think that we're using it, but in reality, we're not. You can put your money in the S&P 500, and I want your take on this. If you put your money in the index funds, S&P 500, let it grow until you retire, call it 30 years. That's not uninterrupted because there's volatility. So when you lose money in the market, it takes longer to come back, and you pay your advisor certain fees, and then you're taxed on that money when you try to pull it out, your capital gains, right? So that's not truly uninterrupted. This is truly uninterrupted compound interest, right?
Absolutely, 100%. And I was actually in the book, Mapping Out the Millionaire Mystery, as you were saying that, I was looking at this chart, and it's on page 36 of this book. And I show you, I said, I tell people, I say, hey, if I could guarantee you a 25% growth on your money, no questions asked, would you do it? You're like, well, heck yeah, why wouldn't I do that? And I show that example. I won't go through it in the book. But the thing is if you put in $100 in the first year, okay, $100 in the first year, and, at the end of the second year, you have X amount of money, right? Like, and if it grows to 200, well, that's 100% growth, okay? And then in year 2, now you have 200, but you lost 50%. So it's back down to 100. In year 3, you take the 100, it grows back 100%. Now you're up to 200. And then in year 4, you've got 200, but it lost 50%. So it goes down to 100. So in year 1, how much did you put in?
$100.
You put in 100. How much do you have at the end of year 4?
$100.
100. But if you take an average, and that's the key, is average, that's what your stock market, your 401k, your advisors will tell you, it has an average growth rate of this. Well, this has a 25% average rate of return. This example. So if I told you that before I showed you this, if I said, Dr. Kyle, over the next 4 years, you give me $100, I'm going to give you, or however much, I'm going to give you a 25% average rate of return on that money. You sign me up right away. Mm-hmm. And this is what I provided you. I didn't lie to you, did I?
Right.
Because I gave you a 25% average rate of return. So whenever you hear that stuff average, it's not average. You got to look at actual.
Yep, it's not actual.
Now also you got to keep in mind that we hardly mentioned the fees, all the charges, all the stuff that goes in there. And then if you pull money out, the uninterrupted compounding, or when the money goes down. Chris Noggle does a very good job. It's on our team. And he has lots of, and Hannah may have some too, but they got some very good videos and tutorials on exactly what you're asking. So be careful of all the noise that's out there. You ever heard the Kenny Chesney song, Noise? Mm-hmm. I use that example a lot. There's a lot of noise out there, and you got to be careful about what you're listening to. Mm-hmm. And yeah, we have these debates and discussions and stuff, and kind of like the Dave Ramsey thing we talked about earlier. I'm not saying don't agree just with me, buy term, invest the difference. Well, most people that buy term, they're not investing the difference. They're just not doing it. They're not doing it. But if you do, you got to kind of look at those too. And also Dave Ramsey, what does he do? He tells you to live below your means. Mm-hmm. Well, again, I believe in Parkinson's law. You have to learn to live off of less than what you make. But I don't want to necessarily live below my means. How exciting is that? And here you have Dave Ramsey telling you to live below your means. Well, I want you all to go Google Dave Ramsey's house. Yeah. Go Google his house, and here's the guy telling you to live below your means. Mm-hmm. And maybe he is living below his, but it's maybe a little different when your means are a little higher. Yeah. There's no reason to do that. Yes, Yes, I agree. You cannot make $1 and spend $1.05 necessarily. That won't work early on starting. But as you develop, and as time goes by, like I said, every day gets better than the day before. Today's better than yesterday. Tomorrow is better than today. As that goes, then it continues to get better with time. And time is going to pass whether you're doing this or not. It's just like when my wife, I was a chiropractor older in life, and I said, honey, in order to be a chiropractor, I'm going to have to go through all of this schooling. I'm going to have to do all of this stuff. And by the time I get out, it's going to be 7 years down the road. And my wife said to me, she says, okay. She says, but if you don't go and spend the 7 years to do it, the time is going to pass anyway. So either we go through the 7 years and you go through this and do it, or you don't do it. 7 years is going to pass regardless. So you have to change your paradigm shift a little bit about the way you think about money. And quite honestly, the ones that are probably are the ones that are giving us advice mostly that we're listening to is our own family. Sometimes, guys, we have to fire our family members. We just have to fire our family members when it comes to listening to financial advice. I'm not saying you can't have Thanksgiving meal with them or spend time with them, but when it comes time to talking about money, you may not want to take advice from your broke ass brother-in-law. You just kind of what's going on and just discover what the wealthy are truly doing. And that's what you should research is what the wealthy. And the thing I'll say is a quote by Warren Buffett. I think about this almost every day of my life, Dr. Kyle. I don't know when he said it, but I heard it in October of 2008. And here's what Warren Buffett said. He says, if poor people would just start doing what rich people do, they wouldn't be poor anymore. How much sense does that make? All we're going to do is do what they're doing, not reinvent the wheel. Just do what they're doing, what they've been doing for the last 200 plus years.
Yeah, absolutely. Hey, so this has been an awesome episode, and really to finish up, I would say this last aspect, the conference again, LegacyRx Conference in October. We talk about legacy, and I would tell you that a lot of physicians I talk to, whether they're residents or physicians, they say the biggest thing I want to do is leave a legacy to my kids and the next generation. And, how are they going to go about doing that? Well, What Would the Rockefellers Do book, Garrett Gunderson is fantastic. He talks a lot about this. I mentioned what would the Keslers do? Because I feel like you've done this very well with your kids, grandkids. You had a conversation with your granddaughter about this. So what are you guys doing quickly on, family retreats, family constitution? How are you building a legacy with this?
Yeah. Everything in my life really goes through this banking concept, everything in my financial life. And it's very important to start getting around the kitchen table and talking about this with your family. Most people don't talk about their finances with their family, no matter how good you're doing or how bad you're doing. It's just not a topic that comes up, and we need to start doing that. We need to start talking about that as far as with the family. So like in our family, we have what we call a family banking system. I own 29 of these policies as we sit here today. I have one more in underwriting right now. So that'll be my 30th policy. My kids have their own policies, this is just 29, my wife and I. I know people that own 108 policies, wow. Right? So, again, all we're continuing to add to our banking system. We also have, a banking system in our family here, which is in these policies where when people in our family need money for whatever purchases they are, maybe it's a house, maybe it's a wedding, maybe it's a car, maybe it's a vacation, whatever it is where they need to borrow money from the family banking system, they borrow it from the family bank, they pay it back with interest, just like you would with a conventional bank, but that money stays in the family banking system. Who's going to get all the money anyway after me and my wife pass, the patriarch and the matriarch? What's going to go to the next generations, the kids and the grandkids, the great grandkids. So that money is going to stay in the family, right? So For example, my daughter's condo, her $925,000 Daytona Beach condo, was initially financed through the banking system, right? Her van, she's got a van. She likes to travel, do a customized van, that she has, a big conversion van. Watch her podcast, you'll see all about it. A boat, my son has a property management business. My older son, he's got equipment, skiffs, or what do they call them? Skid steers, financed through the banking system. All my kids' houses are financed through the banking system. The money stays in the family. They pay interest. They pay a higher interest than the conventional bank would charge them. Sometimes they bitch about it, but when they know the money is staying with them in the banking system, that's what we teach this stuff. We teach you how to be bankers, how to be family bankers. Very important. And you mentioned it as a retreat. You can do it. Every year we have an annual family banking meeting at least once a year. Our last one was in February at our house in Island Park, Idaho, where we go snowmobiling and skiing up there on the West Yellowstone, Montana, 20 minutes from Big Sky Ski Resort, Island Park, Idaho. Google it, some of the best snowmobiling in the country, right? I bought that place with our banking system, right? That's how we bought that place. Well, the family was up there. So what do? I break out a whiteboard and we go over where we're at, what we're doing, what our wealth is, what's in our policies, how our banking system is growing. How did it compare this year to last year? That's amazing too. When you can do these and keep doing them and see the growth. Well, how did it grow like that? We didn't put that much money into it for it to grow that much as it was. Well, it's because we're using the banking system. We're playing honest bankers with ourselves, and the money stays in the family. And remember that word, uninterrupted compound interest, guaranteed tax-free growth. Not to mention dividends. Dividends aren't guaranteed, but there's paying them. They've been paying them for 125 plus years, So it's amazing what happens the longer you do this. And even though the kids will sometimes get off track, not so much not so much Hannah anymore, or Sean, my oldest son, Zach, my youngest son, that's the pilot. He sometimes doesn't get everything because this just isn't, his thing. And then the grandkids and stuff like that. We just got to bring them back around the campfire and reteach what Nelson Nash taught us, reteach. And again, this book, I would have never wrote this book, Mapping Out the Millionaire Mystery, if it wasn't for Nelson Nash. I owe everything to what Nelson Nash gave us. That's why I'm sitting here today. We just got to keep going with the legacy. And even though when you don't think your children are getting this or other members of your family that you're having these meetings with, some of it is sinking in and some of it is sticking. Because ask my wife, I used to put my kids in the car when they were young, Hannah and Zach. I put them in the car because I wanted to teach them about banking. And before I would try to do it at home. And they just weren't, I couldn't get them to listen and settle down, their attention span, all of that. And then I said, okay, let's go, kids. I'm going to go out. Let's go out for ice cream. So I take them to the furthest ice cream store across town. And guess what I talk about the whole way there? We talk about infinite banking. Because the one thing I found out about children, they will not jump out of a moving car. They won't. No matter how bad the topic is, they will not jump out. So they had to sit there and listen. And so that's a way to get your kids to listen when you're having a hard time. But awesome. Start them young. Even if you don't think they're listening, start showing them what you're doing. Say, I'm buying this. How am I buying it? Well, it's going to go through our banking system. So I'm going to go buy whatever it is. You can buy them a go-kart, a bicycle, start. This braces for their teeth, whatever it is. We use it for anything. Remember, it's called infinite. There is nothing you cannot use this concept for. Even if you wanted to use it for a pack of Tic Tacs at the Quick Trip or the Wawa, you could. You're not, but you could. Any product or service that you're buying, remember that money leaves your family. It's gone forever. Let's run that money through our banking system.
All right. Very, very last point. You're a pilot. you have your own plane, correct? And you've had it. This is probably the fourth or fifth maybe that you own now. And my wife and I, that's a big goal of ours. So what's the best advice you have on getting up to that point to be able to buy a private plane, to be able to fly to different places across the country?
Yeah. Well, again, the quick, simple answer is, everything you buy, if you run it through the policy, not only do you get the product or service that you buy, you also get the money back. And I prove that to you. Actually, the book Nelson Nash proves that to you. And when you go watch what I call the car example on my 90-minute presentation, you'll see how you recycle, recapture, get all the money back for the car. And that's a $25,000 car that I use as an example. So my very first plane that I bought it for $101,000. I didn't know this concept back then. I didn't do it. It was back in 2005, 2006 when I bought that first airplane. Remember, I never started implementing this until 2008. So I bought that airplane and I paid it. So that $101,000, make believe this is a $101,000 bill, that left my family. It's gone. That is part of what made out that $984,711 of debt that I had, that I paid off in 39 months, was that airplane. So I went and bought that airplane. But then the second airplane I went out and bought, and I understood this concept. Well, that second airplane I bought, I think it was in 2015, 2014, something like that. Well, that plane was $570,000, 560 or 570. I understood the concept. So what did I do? All I did is I used the money in my policy to go out and buy the plane. Now, I didn't have all the money in the policy. And remember, I said this is not an either or, this is an and. Mm-hmm. So I used some money from a conventional bank. I borrowed some money, and I used money from my banking system because I didn't have it all. It's okay if you don't have it all. You don't have to say, oh, crap, I don't have it all, so I can't buy that item. No, you just do what you can do, and then the rest you use your own banking system with. Well, if you watch that example and the car example with the $25,000 car in my presentation, all I want you to do is replace a $25,000 car with a $570,000 airplane. Now, I was paying more in premium and stuff like that, the cash value, things like that, but it's still the same concept. So I recaptured, recycled all the money for that airplane. So I did the exact same thing that I'd show you on the car example for that airplane. Then what happens in 2020? In 2020, we say we need to upgrade airplanes. So we went now and we buy a $1,610,000 airplane. What do? Exactly the same thing we did with the $570,000 airplane. It's the same thing. It's just a larger dollar purchase. So we did that, kept that plane for 2 years, recycle, recapture the money back for that plane. Not only did I recycle, recapture money back for that plane through the banking system, when I sold it 2 years later, I sold it in 2022, value of planes went up during that COVID time. I put about 800 hours on that plane in 2 years. I sold it for $2,124.
Wow.
$2,124. I made $514,000 on that airplane and sold it for 2 years later and put all those hours on it. So then, why did we do it? Because now my wife went out and picked out the airplane. She flew to Pennsylvania or Maryland or somewhere because she wanted a bigger plane with a bathroom in it. That's what she wanted. She wanted a bathroom in it. So she went out, and again, if you guys know anything about aviation, my first plane was a 172 Cessna. Second one was a 206. Third one was a Piper Meridian, and now this one is a Pilatus PC-12. Went out and bought that one in 2022. Paid $3.1 million, right at $3.1 million for that plane, and we still have that plane. 3 years later, 3 years to the date. I think we bought it in June or July of 22. We still have that plane, and that's the plane we're currently flying, using the banking system. So it's yes, it sounds complicated, but it's very simple and straightforward because all you do is you plug in that product or service, no matter what the cost, low or high, and now it's up to you how long it's going to take you to recycle and recapture that money. And the decision is, or the determination of how long it takes you is how much are you putting into your banking system? Are you putting in $1,000 a month, $500 a month, $10,000 a month, $20,000 a year? It's up to you. There's no right or wrong. I always say it doesn't matter if you make $10 an hour, $10,000 an hour. Break the bonds of financial slavery that you don't even realize you're in, and take control of your money. And there's no risk, Dr. Kyle. People say, well, what is the risk? Nobody within the sound of your voice has ever lost money in a whole life policy in a mutual company that pays dividends. It's never happened. The only risk factor is you and how you use the policy. So the only one that can screw this up is you through your own actions, because the insurance company is going to do exactly what they say in their contract. So you're the risk factor in all of this. And who do you know better than you? Probably nobody.
That's awesome. Love it. You're the man. So good at making this clear, and you bring it to light so well. So thank you for coming on the show again, Brent Kesler. Where can people find you?
Brent at themoneymultiplier.com, Brent at moneymultiplier.com. Email me and I'll send you the book, Mapping Out the Millionaire Mystery. You can also go to our website, www.themoneymultiplier.com. We have lots of stuff on there. Watch the full 90-minute presentation. Watch Brent now. There's lots of tabs. There's lots of short videos. I think there's 70 videos on there. Go and follow the podcast, the Money Multiplier podcast. Follow that. My daughter Hannah does that, as well. So that's the best place. But guys, listen. Get to Dr. Kyle's event. I know, Kyle, I don't know. Hopefully this is going to come out and people will see it before your events coming up in October. But October, get to Dr. Kyle's event. Just do whatever you got to do to get there. Even if you got to leave, even if you got to come a little late, stay a little early, make sure but just get there. And again, I wouldn't suggest coming late and getting early. Get there for the whole thing. But honestly, I know Dr. Kyle. I know how he rolls. You watch his content. I don't have to tell you. You know how passionate he is and how giving he is and how he wants to serve and teach people. Just get to that event. Get to the event and get these nuggets, that you are going to get and he's going to provide. I think that's going to be valuable. And either if you can or you can't get to the event, just get around this stuff. Get around this stuff and learn and watch and do it over and over and again and again. It may not come through the first time. Remember, it took me 2 years. I learned about this concept and it took me 2 years to start because I thought it was too good to be true. Thought there had to be a catch. And I get it because it's a paradigm shift. It's not what conventional money and finances are teaching it. And to be honest, Kyle, just if we can be totally transparent, when you first had me on as a guest, you really didn't understand the whole concept. And after I spoke, you were like, well, crap, I got to look a little bit more into this and see what it's about. And you did. You dug just like I told people to dig. And you're like, man, I think I better get involved in this and start doing it with my family and start doing some of these and stuff. And you see, and then since then you've been around other stuff. You actually came to an event of ours. We went to Whistler, Canada not too long ago. You attended that. And again, I know you've done that stuff and I know you've done the research, not only for yourself as a benefit for yourself, but to be able to bring these concepts and these ideas and to share it with others. And the last thing we want to do is share anything with anybody that's going to harm you in the future. And the thing I love most about my job, I say this all the time, is nobody's ever mad at me. Because see, back when I was a chiropractor, even though I strive to do the best for my patients, I didn't help all my patients. Some of my patients came in and I say, Mary, here's the plan. Here's a treatment plan. I'm going to see you 3 times a week for 4 weeks, 6 weeks, whatever. Then we're going to reevaluate. The patient comes in 10, 12 visits later, 8 visits later. Brent, I'm still in pain. I'm still in pain. I'm still here. Mary, it didn't come on overnight. It's not going to go away overnight. It's going to take some time. And even though most of the time our patients get better with care, because if they're not getting better, you're going to release them or refer them out. That's the moral and ethical thing to do. But not all patients get better. And that was kind of a bummer part of my job, is because you're using all the knowledge that you have. You're calling up other colleague physicians and say, hey, this is my diagnosis. This is what's going on with this patient. What do you suggest? I'm at a crossroads here. In this concept, what we teach, nobody's ever mad at me. People don't get mad at us for helping build, keep, and create their wealth. Like I said earlier, you guys are great at making money, but most of you suck at keeping it.
Yes.
That's our job, is to help you keep that money through a financial strategy that's been around and used for the wealthy for well over 200 years. Mm-hmm. The last thing I'll say about that is I design your concept, your policy, your process. I design it. Our team designs it the same way we design our own. The way we design our own. There's no secret sauce that I put on my policy that I don't put on yours. Mm-hmm. There's no secret sauce. Whatever is best for you, is what we do. That's what we do. So my policy is designed exactly like yours. Yeah, the premium might be different. I may be at a different health status at you. We may be younger or older, but that's how we design the policy for the infinite banking concept, for your cash value use, the death benefit. That's how we design them.
Yeah, no, this is fantastic. And the thing I love most about you, Hannah, the team, the Money Multiplier in general, is you guys are fantastic at educating. It's not a sales pitch. You literally educate people on this is what it is. And then you are transparent more than anybody. So I would advise all of you listening to reach out to Brent, to reach out to Hannah, and watch Brent's 90-minute video. It's fantastic, and it flies by. 90 minutes flies by more with that video than anything. So come out to the conference, LegacyRx in October. Listen to Brent, meet him in person. I know I have a couple buddies, brother-in-law. They're huge fans of yours, so they're excited to come out and meet you personally. So this is great. We appreciate you, and we'll talk again soon.
Great, Dr. Kyle. Thank you. And thank you, everybody, for being on and listening. We look forward to serving you all in the future. We'll see you in Indianapolis.
Yes, sir. Thank you.
This is my time. I'm on the rise. Can't hold me down.
Thank you for tuning in to the Assets and Orthopedics podcast. If you're ready to elevate your mindset, build your empire, and create a lasting legacy, don't miss the inaugural LegacyRx Conference on October 24th and 25th in Indianapolis, Indiana. It will be a transformative weekend designed to help you unlock your potential, take bold action, and redefine your future. Visit LegacyRxConference.com to grab your ticket and join the movement. Until next time, be bold, embrace the hunt, unleash the beast.